Europe's markets buckle amid Trump worries, downbeat earnings and data. Welcome to Market Insight, I'm David Pollard. Europe's markets were buckling today under the weight of worries over Donald Trump's policies, with downbeat earnings and key data out of Germany and the UK also keeping minds focused. Well, Fiona Cincotta, Senior Market Analyst at Citi Index, is with me now. Welcome, Fiona. In the US, investors have been funneling cash into assets they think will get a boost from Trump's second term in office. But in Europe, it's a very different story, as worries over tariffs in particular continue to cause anxiety. Do you think we're anywhere near seeing the worst of this over yet, this post-election shakeout?
It's a good question. I mean, we're definitely sort of at that stage where this idea of uncertainty is really hurting sentiment. You know, there's this general sensation and feeling that Trump will be applying tariffs. Exactly what those tariffs are and what they will be applied to, we still don't really know. So there is that level of uncertainty, and we know that markets hate uncertainty. However, I do think that if we look at the broader picture as well, growth in the Europe region is weaker than potentially in the US. So I think as a geographical sort of location for investing, I do think the outlook for the US is still much more compelling.
So as you say there, we don't quite know yet what sectors are looking most vulnerable from tariffs, but what's your guess, and how badly could certain sectors be hit?
Okay, so if we have a look at the sectors which are the biggest exporters to the US, they're pharmaceuticals, automotive, and the chemical sector. So I think naturally that's where we'd be looking to see the biggest hit on tariffs. That's where we'd expect the US to be applying the biggest tariffs, and that is what we're seeing as far as the share price and reflection in market sentiment is showing. So I think they're the areas that I would be keeping an eye on. I think there's also a sense as well that, for example, in the banks, we know that Trump is looking to deregulate US banks. So that could also have a negative effect on German banks, for example, who might be seen as less competitive. So, I mean, not only are we just looking at the concept of trade tariffs, but I think there are some other nuances that we need to take into account as well.
Could those fears already be playing into sentiment around earnings news? Because this morning we saw Bayer, Brenntag and AstraZeneca all selling off. And in AstraZeneca's case, that's despite some upbeat forecasts. What were you seeing in today's earnings headlines?
Yeah, so we have seen some big moves. And I think you're right. I think not only have we seen some disappointing numbers, but I think the sell-off in those share prices have been accentuated and accelerated by those concerns of tariffs as well. I mean, for example, Bayer fell around 12%. It's trading at a 20-year low. And I mean, although we saw that the pharmaceuticals and the consumer side of the business actually performed okay, we did see some weakness in the agricultural side, especially towards Latin America. Losses came in at 4 billion euros, so quite a heavy hit there. Again, with Brenntag, we saw disappointing numbers, below forecasts, and share prices reflecting that with an almost 10% sell-off. But again, I think that is to do with the disappointment or concerns surrounding Trump tariffs. As you mentioned, AstraZeneca, that's down 1% despite beating on earnings and revenue. But I think we're still seeing some reactions there to the news in China, how their chief in China has been taken by authorities, and that's just unnerving things as well.
Now, as you mentioned, Europe still looking weaker for investors than the US. And this morning, Germany's ZEW Institute reported a stronger than expected decline in its economic sentiment index to 7.4 points from 13.1 in October. That's mostly on political uncertainty, of course, as much at home in Germany as in the US. It does, though, say it's been hearing more optimistic voices in recent days. Should we take some positives out of that last comment for the struggling German economy?
I think it might be a little bit premature to get excited about any sort of turnaround in sentiment towards Germany right now. This is obviously what we do want to start hearing, and we do want to start seeing more encouraging figures. And maybe we're moving towards that point. But I think, as you pointed out, you know, we've got political uncertainty in Germany domestically. And then you've also got these concerns regarding Trump taking office in the US in January. So I think combining those together, that does create quite a lot of uncertainty for businesses in Germany, particularly as we mentioned in certain sectors. That said, we have seen from recent PMI data that a bottom does seem to be in as far as sort of the downturn in manufacturing is concerned. So maybe there is some hope that we're moving towards a slightly improved outlook as we head towards 2025.
Let's finish by looking at Bitcoin, which has been roaring upwards on thoughts that Trump will be more friendly towards crypto. Would Bitcoin crossing $90,000, which seems very possible now, would that sound a warning bell?
No, I don't think it would. In fact, I think quite the opposite. I think there is potentially more room to fly as far as Bitcoin is concerned. So, I mean, if we just take a look, we're at this situation where we could potentially see deregulation in the sector. It's coming at a time where we're seeing increased institutional investment in the sector. We've seen ETF demand surge over for Bitcoin over the recent weeks. And then if we take that into account with where we are in Bitcoin's 4-year cycle, that also sort of supports the idea that we could be looking to strong gains. I do think, though, we must remember that assets rarely go up in a straight line. And just if we look technically at the Bitcoin picture at the moment, it is overbought on multiple time frames. So we could see a little bit of consolidation, potentially even a pullback. But I think broadly speaking, there is room to continue the rally into 2025.
Okay, Fiona Cincotta, Senior Market Analyst at City Index. Many thanks for sharing your thoughts with us today. That is Market Insight. We have more videos on Reuters.com.